Yo, yo, yo. Good morning, good afternoon, good evening, and everything else. How's it going?
Man, can you hear me?
Yeah, I can hear you. How's it going?
Yeah,
You good?
sweet. Sweet. All good, man.
Nice one, nice one. Perfect, perfect. Let's see. Good morning. What's up? All good, all good. Excited. Yeah, man, feeling good. Had a nice shower. Feel fresh. Everything's good. Mic working now, Mike. Yo, Cyber Mike. Is my voice low?
Oh, you're right.
I'm good, yeah. I think you just have to turn up your speaker or whatever, your volume, maybe. 6 a.m. on the
Best
Sunday.
place to be at 6 a.m. on a Sunday.
6 a.m. I know it's like.
I know, it's 9:30 p.m. here, so.
I think it's like
Well, it's 1 a.m. for me.
Oh, what? 1 a.m. for you? Jeez. I mean, I
Yeah,
think,
that's the dedication, eh?
it is, man. Hard work pays off.
Bro, there's no time.
There's no time to waste.
Exactly, bro. Let's go.
Sick. I think we've got enough people. So yeah, everyone just keep their mics like muted until like the end. If you have any questions and stuff, there's an option to raise your hand, and at the end I'm gonna like go through all questions. Is Stingy on the call? Ellison, yo, no, not yet. All right. I'm gonna need someone to go through like hands up and stuff like at the end, and then we'll like go in order, like take turns to answer each question.
I can't keep my mic on full on now, so someone else probably will be better.
Yeah, no worries, man. No worries. We'll do it at the end anyway. So yeah, you can just like mute yourselves and stuff. That's fine, and I'll share my screen and we'll get started. All right. Perfect, perfect. Can you all see my screen? Yeah.
Yeah.
Sick. So basically, right, obviously last week we went over order flow ranges and obviously gave it a good week so you can digest the information, test it, get used to it, train your eyes and everything. And then like the next main part is obviously supply and demand, like POI selection and liquidity inducement. So we're going to go over that today. Next week will be all about entries, entry models. So supply and demand, obviously, like after you've got your order flow ranges, like the direction, the trend of the market, what you're trying to do. Are you trying to sell with the trend, or are you trying to counter trend, buy it against the trend? Yeah. So the way that we all basically should only ever be looking for our entries, like to get in on buys or sells, is only and only from supply and demand POIs. Yeah, like supply and demand zones. What I recommend for everyone to do is to like if you have a pen and paper as well, like to write everything down, and that's very important. Scientifically proven, writing things down helps you retain information like 70% more, and that's why I have like books and books of like writing, notes, concepts, testing, gathering data, and everything. Very very crucial to your learning, right? So in terms of like what is supply and demand, like POIs, what is supply and demand? Like I said to you on last week's Zoom, right? The market like the market moves via like two participants in the market. There's sellers, there's buyers, sellers and buyers, yeah. AKA supply and demand. When the price goes higher, is because there's more demand than supply in the market. The price will go up, yeah. So vice versa, when there's more supply than demand in the market, the price will go down, yeah. And like I mentioned last time, it doesn't matter if it breaks with a wick, if it breaks with a body underneath that supply demand zone, it's now fully invalidated any demand or supply that was in the market, right, at that time, yeah? So, because the fact that there's a sell order traveling below buy orders, right, invalidates any orders, any demand that was left in the market here, yeah? Any unmitigated orders. And what is supply and demand? Like, simply in my own words, simply put, is that supply and demand is simply where there's a large influx of buy orders or sell orders in the market, right? Injected into the markets by BFIs, yeah, banks and financial institutions, who are like the large institutions are the people who can move markets, yeah. Like we don't have enough lots or volume, or like we can't initiate that many orders to even move like a pip in the market, yeah. So it's only BFIs, the large banks, the large whales that can actually move price, yeah. And what our job is to do is to get in, right, where sellers are stepping into the markets or where buyers are stepping into markets, yeah. And that's our job, is to like get in and follow the footprints of the BFIs, yeah. Like the BFIs do their move, you know, they do their intentions, they do everything, right? And then what our job is to do is to follow them later on, yeah. So like do their move, like okay, we know that BFIs injected sell to buy orders, right, into the market. So we need to see if we can get in, right, if price comes back to mitigate out of these orders, yeah. And basically supply and demand zones, like in terms of a supply zone, it's your last bullish buy to sell, yeah. It's the last buy to sell. Like the whole thing is like manipulation of price, right? Manipulation is such as something like this, right? For example, where they sell, right, heavily, they sell very aggressively down, sweeping liquidity, then showing you that V-shape recovery, showing you the strong BFI intentions to go to the upside, right? It's like a V-shape, it's like a U-turn, you can say. Like when you're driving, you do a U-turn, right? You go one direction, but then you reverse and go the other direction, yeah? And this is all done on purpose, yeah? Like manipulation. So manipulating price to the downside before the buy up. So that's your sell to buy, yeah? So in terms of like what it could just simply look like in a body candle, that's like a sell to then buy, yeah? So that's your demand, right? And then the opposite is your buy to sell, that's your supply, yeah? And simply we need to see if we can get in where the sellers step into the markets or where the buyers step into the markets with our correct confirmations and everything, yeah? So in terms of like the three ever types of supply and demand zones that I'm ever going to look for buyers or sells from is from these three types of zones, yeah? You should never be looking for buyers or sells in just random places, random space, you know, nothing happening. You're not looking to the left. You're just blindly trading, yeah? You should only be looking to get in where there's been an interaction between supply and demand, where there's been clear activity of buyers stepping into the markets or sellers stepping into markets, clear activity, right? Clear strong moves up and down, right? Aggressive price action. So like, you know, like I said, never just randomly blindly sell and buy, right? Not looking to the left. And then don't use like imbalance and stuff as well for like your POIs. Like we have imbalance right here. Don't use these as like POIs, yeah? Like imbalance is showing you, you know, strong aggressive moves to the downside or to the upside, etc. Right? But like it's not where the initial right buyers or sellers stepped into the markets, yeah? It's just a move afterwards. The initial area was here where the unmitigated buy orders are resting, yeah? They buy up to sell. So the theory is unmitigated buy orders or unmitigated sell orders, right? The BFIs are in theory, the BFIs wanting to come back, right, to close out or mitigate. What does mitigation mean? Mitigation, closing out of your orders or like decreasing your risk, right? When we move our stop loss to break even, like we enter a trade and we move our stop loss to break even. Yeah, that's mitigating your risk. Or let's say you close your partials to cover your risk. Yeah, again, that's mitigating your risk. Yeah, so it's the same thing here. Unmitigated buy orders, right? They are in drawdown at the moment if the price goes to the downside, right? Because they're buying up, right? And then the price is to the downside selling down. Yeah. So any buys in here, such as if you had your trade like this, but you have no, let's say you have no stop loss, yeah? And then the price is all the way down here. So obviously you're going to be in drawdown now, yeah? So in theory then, what we know is like, okay, the BFI may want to come back to mitigate out of these buy orders, right? Buy to sell orders before traveling to the downside, before continuing their original move, yeah? So that's what we are looking for then. We are looking for these three types of supply and demand zones that can assist us in like, you know, catching these moves with the sellers and buyers, you know. So in terms of the first type of supply and demand zone is an extreme of a breaker structure or break of order flow booth, yeah. So the extreme points, the very, very lowest or highest points of like a break of order flow, like, you know, your order flow ranges, they're very extreme points. Obviously, these are where the initial right? Initial sellers or buyers stepped into the markets, So if this is where the unmitigated orders are resting, and it's the very extreme as well of like your range, for example, yeah. So this is like the best place to buy from, isn't it? Right? Or sell from, vice versa. Yeah. So obviously we know that if price comes back into here, we can catch a nice entry that we can be very well protected, right? Because in the case of like bullish order flow, right, usually you see like the lows getting protected to continue higher pricing, yeah? And vice versa, you usually see the highs getting protected to continue lower pricing, yeah? So if we can get in on the extreme points, the extremes of the ranges, that's like the best positioning, isn't it? It's like the most discounted place to buy from or the most expensive place to sell from. Yeah. So that's simply the extremes of break structure. I'm going to show you how I map it up later and stuff, but I'm just talking you through the three types first. And then the second one is your supply and demand flip zones. Yeah. So these are very, very great concepts and works a lot, like especially US30 as well and everything really, but it's a great, great concept for supply and demand zone. It's simply where there's for example, like this, right? There's a supply zone right here and it gets mitigated, yeah? And then the mitigation gives a reaction. It doesn't have to be a major, major, massive reaction, right? But it can just be like a sell candle and then a buy candle. But the thing is you have to see it break that supply, yeah? This supply zone needs to be fully broken, even with a wick, right, or wicker body, they can break it, right? But the thing is, you want to see is a supply zone gets a mitigation, gives a reaction, fails to do anything, fails to actually go and break lows or anything, right? And then this is where demand really steps into the market to go and break the supply, yeah? AKA then leaving us behind a demand zone, right? Your supply to demand flip, yeah? Leaving us a demand zone for us to then look for a entry from, yeah. And then obviously vice versa is when you have a demand zone, price comes in, gives a reaction, fails to do anything, and then breaks the demand, leaving us a supply zone for us to look for an entry from, possibly, yeah. So then that's the second one. And then thirdly, we have a liquidity grab candle, yeah, FU candle, whatever you want to call it, liquidity sweep. Simply, this is a three-step process, yeah. Very important to understand, like it has to do all three steps. Number one step, obviously, like let's talk about this price action, right? This price action, right, number one, sweeps liquidity, whether that be a trend line liquidity, whether that be equal lows or relative equals, or whether that be structural low, structural highs, yeah? A structural low and high is just simply a low that breaks a previous high or a high that breaks a previous like low, right? It's a supply overcoming demand or demand overcoming supply, yeah? It's obviously there must have been strong enough orders, enough sell to buy orders injected into markets here to overcome the previous supply, yeah? Otherwise, why did it not continue to do this? So that's just called like structural liquidity resting. Obviously stop losses or orders resting above and below, right? Every single high and low, right? As liquidity, right? So using the first step, which is sweeping liquidity, right? The second step must be show you a V-shaped recovery, right? You must see a V-shaped recovery. It must show you the strong intentions, sell to buy with aggression, yeah? Showing you that this was a strong manipulation of price on purpose, right? Done for a reason. You don't want to see this, yeah? Slow corrective price action, yeah? This is not a liquidity sweep. This is just bearish order flow, right? It's a big difference. So the intentions, right, of this price action clear as day is that on purpose they want to come down, sweep all this liquidity, V-shaped recovery away, right? And then the third most important step, I'd say the most important step, number three, is that this demand has to overcome supply, yeah? Because if it doesn't overcome supply, how can you ever say that this was a strong demand zone? Yeah, how can you ever say that this demand or the order that were initiated into markets here were strong enough or good enough to actually overcome the sellers, yeah? So then you can't say that demand is strong then, right? You can still say that, okay, supply is still strong and we may see lower pricing, yeah? So that's the three steps. Has to be liquidity sweep, V-shaped recovery, and break supply, yeah? It can be any supply, but it has to break something, right, on the opposing side, yeah? So same vice versa, we have a strong V-shaped recovery, right? It takes out the low, right? Sweeps the liquidity before it, and then that becomes a strong sort of like POI in case like price was to come back into it, yeah? So that's the three steps, right? In terms of where you want to ever take your POIs, it should always and always be in the premium discount only of your ranges, yeah? Such as, for example, let's say you have that 5-minute or 15-minute bullish order flow range, right? Always make sure whatever you're taking your POIs from, always are in the discount for buys, right? And then vice versa, for sells, yeah? Always in the premium for sells, right? So this eliminates, you having like, 10 different POIs, like having like a 1-minute POI here, right? Make sure you have your 50-minute POIs down in the discount, yeah? That could be like an extreme of the range. It could be an ST flip that broke the range, right? So yeah, like just make sure it's in premium discount. It's a so simple rule, like but it's a foundation of, it's like foundational like, principle of business, of any business, is to buy low and then sell high, yeah, to make profits. So it's like what we should be doing as well, And as you can see, a lot of times, like, it likes to come back deeper to actually make its move, yeah. Before I go into this as well, like, as you can see, even though, like, this is what flipped and broke that range previously, right? Even here, but like, why did it not get respected? Yeah. Again, when it broke this high, why did this not get respected? Yeah. So this is something that you need to pay attention to, is that, after a major run on like liquidity, a major high, right? After it takes out a major high, major sweep of liquidity, usually you see a deeper pullback. Yeah. As you can see, it doesn't respect the first range. It continues to make lower pricing before, right, making this new order flow range from here to here, right, coming into the discount to then look for buys, right? Again, run all this liquidity, right? Why did it not just come into there to go higher, right? It wants to come into lower pricing, right? You make a deeper pullback into cheaper pricing, right, before going higher. Again, every time takes at a high, coming deeper, take a high, coming deeper, yeah? So it is something you really need to pay attention to. Yes, it's valid, but again, just pay attention that, okay, maybe we may see lower pricing after a major run on highs, yeah? So now I'm just going to talk about, like, how I map up all these supply and demand zones. So let's talk about the wicks first, right? Easier to talk about this. In terms of liquidity sweep wicks, yeah, when you see these big long wicks that are unmitigated, first of all, that are engulfed already, because on a lower time frame, this will already be engulfing, right? As you can probably tell on a lower time frame, it will already have an engulfing candle sell to buy, fully unmitigated, and we can just use this as a POI. Like, I'll just literally mark up this box from there to there, right, as a POI, and every single POI should be from the 15-minute time frame and higher, yeah? You should never be going down to like 14, 13, 12, 10, right, to find POIs, yeah, in terms of like your 15-minute bullish order flow range, yeah? It should always be on the 15-minute time frame for your POIs or higher, all right? So don't justify on a low time frame. The only time I ever go into like the 1 minute and stuff for the POIs is when it's a 4-hour demand zone or supply zone. Price comes in, you get a 5-minute chalk, yeah? That 5-minute range, right? Then you can look for like 1-minute POIs, right? Same concept for everything. 4-hour, 15-minute, 1 minute. The same 3 types of zones are the ones that are like the high probable zones. That's the ones that we should be looking for, the high probable POIs, yeah? Not just any single random POI that you see, yeah? So let's see, okay, in terms of that's a clean unmitigated wick. Again, liquidity sweep, equal lows, right? V-shaped recovery, takes out supply. You can use this as a POI, yeah? If price comes back into it, for example, yeah? In theory. So I'll just use this wick alone, right? Again, you can see like there's a wick here, there's this wick here, yeah? Again, this is a very good POI. What's this POI, right? In terms of this wick here, as you can see, equal lows were resting right here. It sweeps them, V-shaped recovery, and then takes out the supply, takes out the highs, yeah? Even takes out this supply here first, right? So then this would be a strong POI in terms of the extreme of the range, right? To use, and as you can see, price comes perfectly back into it before shooting off, right? Probably there wasn't even an entry in there because it just strong V-shape in and out, sweeping liquidity, comes into the POI, off it goes, yeah? So that's them liquidity sweep wicks. The other wicks you need to pay attention to is your sell to buy wicks or buy to sell wicks. So for example, as you can see right here, yeah. As you can see right here, these sell to buy wicks, yeah. So when you see these sell to buy wicks on the 50-minute time frame or higher, yeah, I will use these wicks just like these, right? Only and only if it's an ST flip, yeah? If it's not an ST flip, if there's no interaction from here, right, to the left in terms of a supply demand zone, there's no interaction, I will never ever use these wicks, right? So just make sure you're understanding that is that, like, for example, as you can see here, you see these buy to sell wicks, yeah? So buy to sell, but what did it interact with? Nothing on the left, yeah? Can you see it's just imbalance right here? So I would never use this, right, as a POI if I was looking for sales, right? So same here, this one is a supply demand flip, right? So I will use these wicks, especially if it's in the discount of my range, yeah? So as you can see, in terms of like the discount of your range, what is it? In terms of first, my range was like this, yeah? But then we push up, we give a reaction and we break that order for range, yeah? So now my 50-minute order for range is from here to the highs, yeah? So then that's where I mark up my premium discount from here to the highs. And as you can see, this POI is like bang on in the middle or in discount, yeah? So like this is enough to use for a POI for an entry. As you can see, price then came back straight into there, gives an entry or whatever, and then goes from here. Yeah, very clean entry, very clean POI, right? So that's a sell to buy wicks, right? Sell to buy meaning that price pushes into your supply zone. So the buy up, right? The buy up, give a reaction.
Cash.
Yo.
So even if that sell to buy wicks that you just showed are right in the middle between discount and premium, would you still take that OB as an entry area?
Yeah,
even if it's right in between.
Yeah, you can just do something like this just so that you have in your brain that you're only ever buying from the discount. You could do that, yeah. Right.
So even if I'm in the discount in this case for even a few points, I can still get an entry.
Yeah.
Okay. Yeah.
Especially because when price is like impulsing or it wants to go, yeah, you won't see it like pull back in so deep, yeah. You won't see this.
Yeah.
It wants to go, right? So that's why you have to make sure you have these marked up, and then if it comes into the discount, you look for the entry, right?
Yeah, I'll just mark the 50% line and
exactly.
That's it,
I would literally do like this on the actual live chart.
Just to make sure. Yeah, fair enough. Yeah,
for your eyes, for your brain to know that okay, you're not like trying to buy up in this area.
Much better. Yeah.
Make sense, yeah?
Yeah. All good.
All right. So in terms of like the concept of the sell to buy wicks is that price pushes up in terms of like the buying up, yeah, and they interact with that supply, then the sell down gives that reaction, that selling price actually, because that's a supply. Like in terms of supply zone, if this is where sellers step into markets, right, then the theory is that why don't we see lower pricing, yeah, in terms of like sellers trying to push price lower, yeah. But if sellers are failing to push price lower and then demand steps into the market here, right, to push price back up, that's called your sell to buy, yeah, and then breaks that supply. So meaning that sort of demand was more powerful than supply, it overcomes the supply. So then when price comes back into that demand, that's where we can look for an entry from. Get me?
Yeah, thanks. All good.
No worries. So that's the wicks. So in terms of now the bodies, yeah, can you see how like what I say here, engulf, sell to buy, or buy to sell candles? So in terms of the bodies itself, so let's say for example, like we have this POI, this one, even this one is already engulfing. So engulfing POIs is simply where the bearish candle next to it, let's say it's your buy to sell supply zone. So your bearish candle next to it has to be fully body closed below of that bullish candle, yeah? That buy to sell full body close, and then we can use that supply, that whole candle here as your POI, yeah? So as you can see, for example, this one's already clean on the 15-minute time frame, so I don't need to refine it or use anything else. I can just use this, yeah? But if you can't see it on the 15-minute, as you can see here, right? This one is not engulfing. Can you see how it's a bullish candle, but then a bearish candle is just a wick like coming down, right? I want to see a full body close next to it, but it's not showing me that. So what I'm going to do is use higher time frames, always higher time frames, like 16, 17, 18, and work my way through the higher time frames just so I can find this clean engulfing candle. And there's a reason for that. The reason is that you want to see the whole buy to sell range, right? You don't want to see just like, one part of it, like a wick or something. You want to see the whole range itself. So that engulfing candle is then showing me that, okay, where's the stacked buy orders resting at? The stacked buy orders are all of this, right? The buy to sell, yeah? And the theory is obviously the buying started from here, yeah? The buying started from this low. They started to push price up from this low, not from this low, not from the wick, yeah? They started to buy from here to here, and then this is where the selling started from, right? The selling started from here, pushing price down, right? So then if this is where the buying started from, this is where selling started from, what does that become? Your buy to sell, supply range or supply zone, yeah? So I mark up the whole supply zone as my POI in case price comes into the literally the bottom of this zone and then it melts off from there, right? But if you didn't have that marked up, the whole POI, right, you would have probably missed it if it comes into there, right? Because you're waiting for it to come into like 50% or something, but price does not have to come into 50% or 80% to then do its move. It doesn't have to do that, you know? Especially when price is like, impulsing, it wants to go, right? It can literally just mitigate the bottom and go if it wants to, right? So that's what I'll do, right? And let's talk about another one. So as you can see here, let's say I'm looking for this POY, but as you can see, it's not clean, it's just wiki, right? So what do I do? Go into high time frames, and coincidentally, 16-minute again, showing me that clean engulfing candle. But can you see how this one bullish candle is engulfing 3 bearish candles here? So 3 bearish candles are engulfed by this one bullish one. Full body is closed, right? Above all of these, yeah? So what I'm going to do let's say price is like right here, yeah? You don't see any of that on the right. And this is your POI, yeah? So I'm going to use the whole range, yeah? Like I said to you earlier, the selling started from here, yeah? And then the buying started from here. So that becomes your whole sell to buy demand zone, yeah? So if you didn't have this whole zone marked up, right, you would have missed this entry from here if you was like, oh, let's refine it down to this, yeah? Because look what happens, like price goes up from there. If you didn't have this marked up, you would not have your alert triggered, put your alert on here, you would not have it triggered, right? And then you would have missed this move, right? But if you had it all marked up like this, then you would have seen it come in, you would have seen, the chalk and entry and everything, and you possibly would have been able to get in this trade, yeah? But then you see how like now, right? Now it's like come down, it's mitigated out of this area at the top, right? And it's gone in broken highs, yeah? So now this area, this part of the area, this POI is mitigated, yeah? So in the future now, when it comes back down, I can't use, again, this whole area, yeah? I'm only going to use the unmitigated area, which is not this, it's only this, yeah? So now this is the only unmitigated sell to buy engulfing that's not been tapped into, right? And then as you can see, then price comes perfectly back into there, right? With generated liquidity as well. This is your structural liquidity sell to buy, right? This sell to buy takes this high, right? This structural liquidity as well as equal laws all resting right before this POI here, yeah? As you can see, price comes in and then literally just shoots off from that, right? So that's when I refine it down, yeah? When it's already mitigated. But when it's not mitigated, then I'll have to use the whole POI so that I don't miss anything. I don't miss the range, I don't miss the move, and all that stuff. Okay. So literally that is what I do for every single POI. Yeah. Like even on the 1 minute time frame, like if it's not clean on the 1 minute, like I'll find the whole candle, let me just double check any questions first. So let's see. Does that all make sense, yeah? They sacrifice orders in the opposite direction before placing their real orders, then eventually come back to mitigate those orders in drawdown, yeah? If even if only the open is mitigated, do you consider it fully mitigated? No. When do you consider a zone invalid, a wick break, or body? Both, yeah? So like just because it mitigates like the open, like let's say for example, like this is your POI, it just mitigates here, yeah? I'm not gonna say it's fully mitigated, like it can still mitigate again, especially when this didn't do anything, yeah? Can you see how like it just pushed up and it didn't even go and break the highs or anything? So it's like, it's still like fully, like you can say it's still unmitigated, it can still get mitigated again, right? Deeper before going higher. It's still possible, yeah? Once,
Yeah, Cash.
yo, how's it going?
Yeah, but in this case, you got also inducement there before the POI, right? So it's even higher, probability.
Like what I'm showing you in this price action, right? Don't look at it like how I'm using it in terms of like this was how I used to use it with like structure points and stuff, back before. So
Yeah.
I'm just showing you the concepts though, yeah? Like the concepts is what is important that you need to use on everything, on US30. So
Yeah.
liquidity before, I'm going to talk about this after, just in a bit. Yeah. So when you look for the engulfed on the 1 minute, you usually look on high time frame or engulfed or go on seconds. I go on to high time frames. Do you look for inducement near the POIs? Yes, I'm going to talk about that in a second. Ellison, this is all structured, not order flow. No, we're talking about order flow, obviously, but I'm just showing you the supply and demand zones first for the POIs, and we'll talk about liquidity after this. Shall we just focus more on the 50-minute supply and demand zones? Yeah, like when it comes to prices just nowhere and it's just like drop in, right? It's not in a 4-hour POI anything. Let's say this is your 50-minute order flow ranges. And then, yeah, like I'm looking for that 50-minute, POIs for me to look for entries from, yeah, 50-minute and higher, right? But obviously when it comes into like a 4-hour demand zone, I'm gonna look for 5-minute chucks, 1-minute POIs to get in on that, right? On the 15 seconds. The first mitigation usually brings early buyers or sellers to get liquidity for the real move. Yeah, that's possible. It can happen, yeah. Especially when there's no liquidity resting before the POI on the high time frame on the 15-minute, then yeah, usually then on the 1 minute, like we want to see liquidity inducement, but I'll talk about that after. So after a 5-minute chalk and a 4-hour POI, do you refine to the 1 minute to get a POI or wait for price to come back into a 5-minute? No, I don't wait for it to come into 5-minute POIs. Just 1 minute is enough, yeah, 1 minute is enough. Like, because we're using 15-second chops, you see, like a 15-second and a 5-minute or high time frame POI is just not, it's just riskier. It's much more riskier because it's a lower time frame. So you need to find lower time frame POIs to match that, That's why you use high time frame chucks for high time frame POIs. Yeah. Do you mark POIs from the left on 50-minute continuations or only the current POI formed? It's only on the current POIs. I don't like go to the left and be like, oh yeah, this is coming from a 50-minute POI. No, it's like 50-minute is bearish already, right? Let me just draw that. Yeah, so 50-minute is already bearish from here, and I find that the new POIs that's created. Yeah, I don't go to the left and find 15-minute POIs. I only go to the left to find 4-hour POIs. Yeah, for two reasons: that we can possibly look for an entry on the 5-minute chocks, or to stop if we come into a 4-hour demand zone. I won't ever look for any more cells inside of this area. Yeah. Only if it pushes away, comes into like a 50-minute bearish order flow range like this, and then look for sell back in. That's a possibility. Yeah. But just no cells inside of here. Right. Vice versa. High time frame supply zone, no buys anymore inside of this range, inside of that POI. Just no more buys. I'll wait for it to either come out of it, come in back into that 50-minute bullish order flow range, into the discount, to then look for the buy, which is what happened last week. The week just gone. Do you ever use, if a higher low doesn't tap anything as a confluence? If it's a likely a higher low can form from nothing on 50-minute time frames and not. I don't understand that question. Fire, Aaron, do you want to unmute yourself maybe?
Yo,
How's it going?
good man. So to repeat the question, it's basically, say if M15 breaks structure and doesn't tap in onto anything on the left, or yeah, and it just pulls back, would you use that high or low as a confluence to like saying it's weak because it didn't tap into anything, or
Like if this doesn't tap into anything, or if this doesn't tap
yeah,
into
exactly.
anything.
Oh yeah, the bottom one.
No, I don't care about bottom one. I don't care about what this taps into. Only I care about if it comes into a 4-hour POI, yeah, but not 15-minute ones. You know what I'm saying? If it comes into 4
Yeah,
hours,
gotcha.
like this, then I'll be careful that I won't be looking for any more sells in here because maybe you see bullish reaction to come into higher pricing something else to then maybe sell. Yeah.
Yep, gotcha. Cheers, bro.
A supply and demand zone can do like one or two reactions. Yeah. A supply and demand zone can do a couple of reactions, such as it can use this, let's say a demand, right? It can use this demand zone as a little pullback, right? As a cause to pullback before lower pricing, like a CPB stands for the catalyst for pullback, little pullback before lower pricing. It could use it as that, right? But then the second sort of reaction it could do, let's say price comes in, it can use that demand as a cause for a full reversal, right? To change character and to make higher pricing now. Yeah. So that's why you have to be very careful when it comes to high time for areas, points of interest. Okay. Okay, cool. So let's carry on. No more questions. Let's see. Right. So now, like, let's just talk about liquidity inducement, yeah? So, like, obviously liquidity inducement is just very, very important in terms of, like, how to avoid losses, in terms of, like, how to catch, like, higher probable, like, trade ideas and then POI selections and stuff, right? Because having let's say, for example, 50-minute order flow range, right, is bullish here to here, yeah? Just like how it is here to here, because this is what this was previously bearish, right? But then it broke bullish, but what flipped and broke the range, it was from this low, yeah? So it's no longer from this low, right? In terms of like what is your current range, right? And as you can see, in terms of like, I'm gonna find this POI on a high time frame, right? This demand zone. The demand zone is what caused the high to get broken, the supply to break, yeah? So then I'm gonna find this unmitigated engulfing candle on a high time frame, like 16, 17, 18, for example. But can you see how, like, before this POI, there's literally no liquidity inducement resting before it, yeah? Meaning, like, it's just one clean push up, right? Leaving imbalance. There's no there's no one to take out on the opposing side, yeah, before making this real move, right? And then what actually happened then in turn was that the whole POI got used as inducement itself, right? For like lower POIs, yeah? It got used itself. Like sometimes if it doesn't have it before the POI and it doesn't give you like an entry time frame, whatever, sometimes it can get used itself as an inducement for lower POIs. Yeah. So again, another thing as I said to you earlier, it was like when we have a major run on liquidity on the left, such as like, strong like highs, structural liquidity, trend line, and all that stuff, right? Like when you get a major run on a high time frame, like the 15 4-hour time frames, like major highs and lows, like as you can see, we get a deeper pullback, right? Again, all this liquidity resting it sweeps it all, gives a deeper pullback instead of just coming back into here to then go. Again, before this POI, there's literally no inducement, just one clean push up, right? There's no one to take out on the opposing side, yeah? And what I want to see before the POI is a couple of things. Like it can look like a couple of things, yeah? So let's say your POI is right here, yeah? This is your 15-minute zone, your 50-minute demand, yeah? And the thing is what you want to see, because this is your 15-minute demand zone, right? You want to see on the 50-minute time frame, the same time frame needs to show you inducement on the left, just before your POI, yeah? So what that could look like is a couple of things, such as like equal lows resting before the POI, to take out, to make its real move, right? Then we look for the chuck after the sweep of this liquidity into the POI itself, yeah? The other thing it could look like is, like structural liquidity, like sell to buys, sell to buy, like it takes out its own substructure, yeah? It's like little sell to buy candles, like you can, yeah, so like even this sell, this is a doji, it's not the best one, but even you can use that low, this sell candle here, sell to buy as a liquidity point to get swept, yeah? Or like cleaner candles, cleaner POIs, use them as like liquidity points before your POI itself, yeah? Instead of using that as a POI itself, yeah, using that as a demand zone, as you can see, sweeps it coming into lower before making higher pricing, yeah? So that's what I want to see. I want to see something before the POI to get swept, right? Before making its real move to then break the highs. So let's say you don't see anything on the left, yeah? Like I showed you, previous examples, like let's say there's nothing, like there's this imbalance, clean push up, right? There's literally nothing to the left, yeah? So then what you want to see now, simply on the 1 minute time frame, price is coming down into your POI, yeah? Let's say it doesn't even touch your POI. Let's say before the POI itself, it creates like equal lows, yeah? So it makes like double bottoms. And why is equal lows a liquidity point is because in terms of like just is generating liquidity in terms of like retail traders and stuff, and people who are thinking like, price is now strong at this level, yeah, this level becomes strong because price is failing to break this low. So then what people are thinking, if this is a strong level, that let's buy from there. It must be so strong that it's failing to break lower than this price point, right? And then what is manipulation then is that, okay, we are waiting then for the sweep of these lows, yeah, this generated liquidity, because there was nothing on the left. So now the 1 minute needs to generate liquidity, right, coming into your POI or even inside of the POI or just before the POI, yeah. It can't be so high up like up here, for example, yeah, because a liquidity sweep is one that, takes it out, right, straight away, gives you the entry, give you the V shape. On a high time frame, it'll look more like a V shape, just straight in and out, aggression, like this, in and out, a strong aggression, yeah. That's what a proper liquidity sweep looks like, yeah. You don't want to see like resting up here, for example, and then it making lower lows, lower highs coming all the way down into there. That's not liquidity sweep, yeah. That's just making lower lows, lower highs, bearish order flow. That's just not anything. Inducement, liquidity inducement in itself, the inducement part means that it's enticing or inducing early buyers to get in, right, or early sellers to get involved before sweeping all the resting orders, the liquidity resting above. You can call it buy side liquidity or the sell side liquidity, right? Before sweeping it to then gather enough orders to make its real move to the downside, yeah, or to the upside. So that's why I'd rather wait, and I've avoided many losses by waiting for the 1 minute inducement to be created and then sweep it, then give it a real move, yeah, take it off the second one, yeah. But sometimes it does not give you equal lows, right? Sometimes it does this instead. On the 1 minute time frame, it comes in. Let's say it doesn't even tap into it, or it does tap into it regardless. Let's say now it gives you a 1 minute chop bullish, yeah? So then this is what I call a fake chop, right? In terms of like structural liquidity, none of these lows, right? People use lows like lower lows as inducement, but no, none of these lows are inducement because it's not enticing you to buy, yeah? How is lower lows bullish? How is that enticing you to buy? How does that make me want to press buy? It doesn't, yeah. But when it does this now and takes out the previous high, now you're thinking about let's buy now, isn't it? Right? Now it's enticing you to buy, right? Now it's inducing you. You're thinking, okay, now let's buy because it's 10 bullish here. So the only point of structural liquidity is this low, right? This is the only low that when it taken out, it went and took out the previous high. Yeah. None of these lows took out the previous highs. You know what I'm saying? Like it's only this low. So then what I'm waiting for now, because there was no structural liquidity or anything on the left, now this low is what I'm waiting for to get swept. Yeah. So then I'm waiting for then the 1 minute chalk after that, right? The second chalk for the entry, right? Let's see. Does everyone understand, right? So we use inducement, liquidity concept, both for continuation and reversals. Yes. Clear. Sweet. Clear. Everyone else, let me know as well. Proper sorted.
Hey Cash,
Yo.
does the 15-minute flip zone
Yeah.
for inducement, does it need a gap?
No. The flip zones are just a POI. Yeah. The ranges need a gap. Yeah. The POIs are just supply and demand zones to look for entry points. Like it's not a range. You know, a range needs to have a gap like this: push down, push up, break, have a gap in the middle. You know, like that's what you want to see as like your range. But for POIs, doesn't need to have a gap in the POI. You know what I'm saying? It just needs to be
for
one
it
of
to be
these.
considered liquidity.
No. Even then, it doesn't need a gap. Like, you know, because a POI, as in like you see how this one, there's no gap, is it? Like from this high to the break. Yeah, it's just a sell to buy. Yeah, like a POI right here. So instead of using that POI as like an entry, right, what happens instead is like it actually sweeps the POI, comes into the lower POI to then make its move. You understand?
Yeah, crystal clear. Thanks.
Yeah, wicked.
Cash, what about like buy to sell weeks? Like
No, buy sell weeks are not as like it has to be a body. I mean, like it can't a wick itself, a sell to buy wicks is not really, it's not point of liquidity.
what if like there is interaction to the left?
Not even then, like the sell to buy wicks just alone, they just nah shit. Oh, you're talking about no, this is not a sell to buy. Like you're talking about these. You're talking about them wicks here. That's what a sell to buy wick is. These.
Yeah, like wicks. Yeah.
Yeah, these wicks. No, it's not inducement. Right.
Oh, okay.
Like I want to see a body like full, like a nice body sell to buy, body like this, like that low inducement, for example, for the lower POI. You know what I'm saying? That could happen.
Yeah, I get it. Yeah, makes sense.
Especially like you know when your people confused about like obviously it has to break bullish. It has to like bullish order flow has to now break bearish to come back into there. Yeah, but I don't know.
That's how I learn everything.
Yeah, but then do you remember what I said in the group about it's in the facts channel about the first 15-minute chuck that happens, right?
I remember that. Yeah.
Yeah, the calls of the 4-hour bullish, the reversal, the pullback phase, right? Or the
extreme is always valid.
Yeah, the extremes are valid.
Yeah.
Even if it breaks the 15-minute to come bearish into there. Right. I'm still going to look for the entry in there because it still works out sometimes as well. So I'm still going to.
But for continuations, it doesn't work because it's changing.
No, continuations, I'm not going to take it like that now.
Yeah,
because there's no like guarantee.
There's no reason behind it.
There's no guarantee. You don't know, like it might go bullish, but then it turns bearish. But then this may be the real bearish move to continue lower. You know, but you're looking for buys here, and all that stuff, and it doesn't work out. So it's too much more riskier. Yeah.
Yeah. No worries, man. Makes sense.
Nice one.
Thank you.
No problem. So you always wait for a fake chuck. Like I said, there was two ways. Yeah. One was a fake chuck, or one was equal lows, double bottoms, triple bottoms, whatever gets generated. Yeah. So it could be either one of the two, right? The other thing as well is this, because this happened a few times. Let's say the 1 minute does this chuck here. But let's say now, right, this is your 1 minute POI that you may want to look for like a 15-second entry or whatever, but you know, let's say it doesn't actually go and sweep them lows, yeah? But what happens instead? Let's say you have that 1 minute POI and 1 minute continues to make these higher highs, yeah? So now, yeah, this low could be now used as inducement for this extreme. Instead of waiting for that low to get swept, yeah? It could even run this low to come back into here, right? But then a 15-second chuck is needed. Yeah, this is going to be covered on next week's entries Zoom, right? But now this low could be used as inducement, as structural liquidity sell to buy that takes its own high, right? As inducement for this extreme or the ST flipped POI on the 1 minute. And then we look here on the 15 seconds for the chuck. Yeah? Does that all make sense as well?
Wait, Cash, one quick question. Mm-hmm. So in this case, what if we run this and then we have a 1 minute change of character?
Oh, then you can take it off there.
Take that? Sorry?
Yeah, then you can just take the 1 minute chuck instead.
Yeah, I'll get it. Or you can take like a 15-second entry on the 1 minute POI.
As a minimum, yeah. You know, as a minimum means like it has to be at least a 15 seconds, or it gives you a 1 minute chuck, then you take it off a 1 minute chuck. It's high time.
No, but what I'm saying is, like, what if we run this as inducement and we don't come back to here?
Oh, yeah, then you get 1 minute chuck.
We get a 1 minute change of character.
Yeah, that's fine. Yeah, that's fine.
Oh, okay. Yeah, no worries, man.
Nice one. Let's see. It's in the details. Yeah, exactly, bro. So always wait until you see everyone else getting fucked. Yep. Like it's just like, you know, save yourself getting so many losses. Like the amount of losses I've saved, yeah, waiting for like confirmations on the liquidity inducement and everything. It's amazing, and not just me, but everyone else. So I'd rather save my money and wait for like something much better, much more confirmed, and risk bigger money on that. You know, I'm not here trying to risk like £10 on a trade, like taking 100 trades a day, like trying to be rich. Like no, like you wait patiently, and you can risk your 1% capital on a big account on these big boy trades, the ones that have all the confirmations, everything sweeping, everything chalking. Then you taking that trade, solid trade, high probable trades. So on the real 1 minute chalk, you wait for 15-second chalks align again. No, you don't need to. You can if you want to. Like let's say chalks, when it sweeps that, gives you that next 1 minute chalk, then you can just simply take it off there. If your stop loss is small enough and the 1 minute is still bullish aligned, you can just simply take that trade. But if you want to wait for 15 seconds again, you can do. Yeah? Just don't want to end up missing it though. But yeah, the same rule applies. Can you please show an example of liquidity on the zone itself? Yeah. Let's just go into there's so many, like there's so many, like literally right here, for example, like this wick here, yeah, is a very great POI. Like look at the confluences it has. It actually is an extreme of the break, right? The extreme of the order flow range, as well as being a liquidity sweep wick, yeah. So it's already swept equal lows, V-shaped recovery, broken these highs, and then this low here, yeah, is liquidity for this POI here, right? So as you can see, like it doesn't, like this is not valid for like a range, yeah. Like there's no gap in between, it's not clean push down, push up. It's not valid for like a new range, so it doesn't have to break bearish. It doesn't have to break bearish to come back into there, for example, yeah. But you can then use that as liquidity for this POI, and as you can see, it sweeps it, comes into it, it V-shapes away, and yeah, you basically look for entry inside of here. One wick is enough, yeah.
Yeah, so in this case, yeah, in this OB you just showed, we can just, since there's inducement there, we can just wait for a 1 minute chalk, yeah?
Exactly, that's
and then just, if the stop loss is small enough, just get the 1 minute OB and market execute or something.
Yeah, that's it, yeah.
Yeah, okay.
Yeah, always.
But, you don't need extra inducement, on the 1 minute chalk and blah blah blah.
This is what people. This is what people like to do. They're thinking like you need it like everywhere. Like you need it on the 15.
Yeah, because they go forever. Yeah,
and 15 seconds, and then 5 seconds.
Yeah.
Like you need it. No, you only need it one time. Yeah. It has to be in a higher time frame. If not, it has to be in your lower time frame. That's it. So simple. So simple. I keep shit so simple. If we have 50-minute inducement, do we need 1 minute again? No. How close do you want the 50-minute liquidity inducement to the POI? It has to be just either above it or touching it, just close enough. Like it's hard. It's not like a pip size or anything. It's literally just like, does it make sense for this being close enough to the POI? Yes, it does. But does it make sense if like this is close enough to that POI? No, it doesn't make sense. Yeah, like because doesn't price have to now like make bearish order flow just to even get back into there? Like yes, it does. So then how can that like that price action being so high up, right, be like makes enough sense for you to consider that's a sweep? It's not a sweep, right? If price has to make like bearish order flow ranges, just like bearish order flow just to get back into this POI, then yeah, like that's not a sweep, then is it? Right? A sweep is like a point of liquidity before your POI to then quickly sweep and off it goes, like V-shaped recovery and go. Yeah. The trades on these price action that you took with structure, you will take it also following order flow. I'm asking because on several they went to the extreme knowing that the extreme is only valid for the first chop. Yeah, like I'm only taking it on order flow ranges. Just imagine like, this is the same concept applied to order flow ranges, right? So like literally, like it's the same thing. Like yes, it goes from here, for example, but like I'm not gonna take a trade from there. For example, I'm gonna wait for it to give me the range, which is now this new bullish range. Right, it gives me this POI. I look for that. Yeah, and 100% it gave you inducement because this tap in. I strongly know. I bet you on a low time frame 1 minute give you that fake chunk and then probably swept it and give you another move here. 100%. 1 50-minute wick is enough. Yeah, understood. Nice one. Sick. So like literally like for like your POI, your supply and demand, your inducement and stuff, It's that simple. Like it should be that simple. You know, if you can't find it on a 15, you go to higher time frames. If it gives you inducement on the 15-minute before the POI here, like, then yeah, you don't need it on the 1 minute. Then all I'm gonna do is take 1 minute chocks. Yeah, like take a simple 1 minute chock, no problem. But if there's nothing here, right, then the 1 minute needs to generate the liquidity, right? Give you equal lows, give you a fake chock, sweep it, give you the second chock for the entry, or it gives you this new structural liquidity, this bullish order flow, takes out a level of this bullish order flow, takes out the low to come back into that first 1 minute POI, for example. Then you take a 15-second chock like this, confirmation to take the trade. Yeah. So any questions or anything? Anyone wants to unmute yourself or anything? It's already been an hour. Flipping on, like this flies. It's crazy. Yeah.
You okay? Can you hear me?
Yeah, I can hear you, man.
One quick question for you regarding the V-shaped recovery.
Yeah.
Are you only considering it when it comes to liquidity grab candles, or is it a part of your plan when it comes to entries? I mean, do you?
I use it as POIs. Like, I mean, if it gives you, if it shows you in the price action itself, then yeah, cool. Like that's the extra confluence, you know. If it gives you an entry model, like let's say at the 1 minute chock happens, right? Oh yeah, so let's say price is making lower lows, lower highs, yeah. Then it quickly wicks down and V-shapes like this and breaks 1 minute chock.
Exactly.
Yeah, then that's just extra confluence.
Yeah, but if you don't see it on your entry time frame, it's not something that will keep you from
it doesn't
taking a
keep me
trade,
from
right?
taking it. No.
Yeah.
I'll still take it.
Right.
You know, that shift in order flow is enough, you know?
Yeah, thanks.
Yeah, because you already have about 5 different confluences already in your favor. So like you don't need too much more, you know? You just execute. You execute flawlessly, you get in, you feel like this is a valid high probable trade to take, then you get in, yeah?
Yeah.
No problem. Anyone else? Just time flies when you're having fun. You're exactly being in the zone. Yeah, man. But yeah, like this is very important for everyone to like understand. And if anyone has any questions, let me know. But literally, like this should all make sense to everyone. Like it might be simple, but some people, you know, still need help on it or clarification on it. So hopefully that all clarifies everything. So once you got your order flow ranges and you're looking for your POIs for your entries, like make sure it's everything I've just discussed today's call, right? What I'll just do is I'll show you an entry model, like what was in here? Yeah, like it was this one. This was the last trade of the day that happened. It was crazy. Like Friday gave too many trades. Like, so let's just let me just delete this shit. So let's just talk about this real quick, yeah. On the 4-hour time frame, for example, yeah. Also for tomorrow, like this is what we're looking for, yeah. So in terms of like on the left, 4-hour demand zone needs a 5-minute bullish chock to buy, yeah. So if you go all the way to the left, right, this demand zone here, as you can see, resting below, right, this liquidity, this structural liquidity, right? It's a structural liquidity point because this low takes out the high, yeah. So it's like, and it's a strong V-shaped recovery, like definitely entices you to buy from here, right? It ends up sweeping the low to come into this lower POI, which again is a sweep of liquidity, V-shaped recovery takes out the highs, right? So that's where price is reacting from. As you can see, look how it reacted. Look how it reacted from it. Yeah, strong V-shaped recovery away from it, yeah? So if it gives you a 5-minute bullish shock, we can look for buys possibly, but for our bearish order flow range from this high, yeah? So yes, we have a 4-hour POI, which is simply just this wick here, right? This buy to sell takes out the low. Yes, it is a 4-hour POI, but also it's a 15-minute, because if you go into 15, right? Can you see how this break means that this is your high and low of the 15-minute order flow range, yeah? So because this is your 15-minute order flow range as well, then all I need to do is find the 15-minute POI, right? Then look for entry from there, right? And as you can see, this was your 20-minute. This whole candle was a 20-minute POI. Can you see this one bearish candle is engulfing all of this bullish candle here, yeah? Obviously price comes into it first time, gives a fake chuck and everything, gives an entry, whatever as well, but then it comes and sweeps this high, yeah? On the 1 minute. Is a wick considered inducement? This wick here, on the 1 minute, yes. On the 1 minute, because price has now come into the POI, yeah? On the left though, there was nothing, yeah? On the left there was nothing, yeah? Before the POI, so that means on the 1 minute it needs to generate something, yeah? So I'm going to show you later, but on the M15, as you can see, this is your high and low of the range from here. Yeah. So now as you can see, price comes in, yeah. So on the 1 minute now we go straight away, as you can see now, right? The 1 minute, yeah, here, right? For example, price comes and gives you a 1 minute chop, yeah. But call this fake chop because there was no structural liquidity on the left, so I'm not going to look for an entry anywhere in here. I'm not gonna use this as some like POI to look for an entry from. Okay, I'm gonna wait for the high to sweep as liquidity, right? Before give me a second. Now it comes into the POI and now give me this 1 minute chop here. Yeah. And then yeah, look for an entry. But for me, this is not entry because yeah, so someone asked me about this. So as you can see, right, in terms of a sell to buy, let's say a supply and demand flip zone, yeah. Remember when I showed you the wicks here? Where is it here, right? So do you know the sell to buy wicks right here? Can you see how there's a wick on both sides? Yeah, it pushes up, sells down, and then pushes back up. So sells to buy. Yeah. Whereas this one is just a wick on one side. Yeah, it just wicks up, comes straight back down. For me, I'm not gonna use this as like a nice clean sell to supply and demand flip. Yeah, I'll rather wait for it to come into here, right, before looking for an entry. All right. That's I'm not gonna use this wick. I know like maybe someone caught it or whatever, but like I would not use this in long term, and I don't see this price action often as well. So just because it showed it one time here, I don't care. Yeah? So whatever, like it all happens, everything happens, all this shit happens.
So Cash.
Mm-hmm.
In this case, would I use the extreme if the stop loss is small enough? Would you have used that
100%.
extreme as a market execute and have a valid loss in that case?
Yeah, but there is no loss right now. Yeah.
Yeah, no, I mean, yeah.
But if it comes straight back in, yeah.
Yeah, price came back up, and then it would have been a loss, wouldn't it?
Wait, what?
Oh no, because I didn't consider that then it started getting bullish again. So we didn't, when it came into the big order block on the right again.
Yeah. Oh yeah, 100%. No, you'll never enter here. No chance.
No, exactly. Okay.
Yeah. No chance. Like, but if you come straight back in here, yeah, straight away.
Yeah, I didn't
but
see
not
that.
When it's
all good.
bearish, bullish, order for no chance.
Yeah, thanks, man.
No worries. So then look what happens here. Yeah, it like takes out these highs, everything, and then it does all this stuff right here. And yeah, there was a lot of entries. But I just want to talk about this last one. Wait. Yeah, let's just talk about this last one because there's so many entries. Like there's about 3 or 4 here. But in terms of the last one, what happens is it does all this stuff, right? Blah blah blah, right? Ends up doing right, taking out more liquidity above these highs. It does so much stuff. Like then the 1 minute chuck happens over here, yeah? Which funnily enough is the same as a 5 minute chuck. Like, but that's just an extra thing. Like it's not important at this moment because we're in a 15-minute POI, so 1 minute is enough. Yeah. So 1 minute chuck happens, same as a 5 minute. So the 1 minute chuck happens, yeah. And then now it's like, okay, is the 1 minute still bearish? Where is it bearish from? It has to chuck here to go back to bullish, yeah, because this is your buy to sell that flipped and broke the range, has a gap in the middle, has one bullish candle in the range, the first one, that's fine. So if it breaks this high now, right, the 1 minute changes bullish. Yeah. Even this. Nah, I wouldn't say that. So like, yeah, this one makes the 1 minute turn bullish. Okay. So because 1 minute's not bullish, right? What does that mean? Now I can't just 15-second chuck it. Like, I mean, I can't just what's it called? Get in on a like a limit order or on a market execution straight away, like from this high or from the extreme. I can't do that. Yeah. Because now 1 minute has now come back bullish. So for me to ever look for an entry, it has to do a 15-second chuck from a 1 minute POI, or it has to give me a 1 minute chuck again. Like it can do that. So in this scenario, look what happened.
Yeah, sorry, Cash.
What, sorry?
Yeah, I wanted to ask you indeed for the 1 minute POI we talked about just earlier on the left, on the very left, on the first.
Oh yeah.
Yeah, that type. So in that case, when it started getting bullish again, it started coming up. Would you look for a 15-second chalk there? Yeah.
Yeah.
To confirm.
Yeah. 15-second chunk.
Okay.
Same like this now. So now.
Yeah, I'm not sure if you gave it there. I didn't have a look.
Yeah, I don't think it did.
Yeah.
Yeah. Let me just double check actually.
I have no idea.
No, it didn't. It is bullish.
Okay. Yeah. Sweet.
It had to break this low for even a 15-second chunk to happen. So no problem. So as you can see, the 1 minute now goes bullish just to get back up into somewhere. So in terms of like 1 minute POIs and stuff, I'd have like this. I'd have like this is mitigated this, so I can't use this. This is not clean because I want to see full body candle or like a wick. And I'd use something up in the extreme, like on a different time frame. Probably like a flipping 5-minute wick. Crazy. 5-minute wick, but look what happens, right? So it actually goes and like there was literally no structural liquidity on this 1 minute PO, 1 minute leg even. Like what actually ends up happening is using the higher structural liquidity to come up higher into something else. Yeah, cool. It comes into something that I don't want to like look for a 15-second chuck from, right? But if it gives a 1 minute chuck again, I'll be so much more interested. Yeah. So like gives a 1 minute chuck now. So now can you see how the 1 minute range is now bearish from this is what flipped and broke the range, cool. But like I have 2 POIs now, yeah. I have like this wick, which kind of mitigated, but I'll still use it as a 15-second chuck, and then I have this here, yeah. So because now the woman is aligned bearish, yeah. So the woman is aligned bearish. That means if it comes straight back into like somewhere that I can get in on with a good enough stop loss, and it makes sense to get in because I swear down, like US30 loves flip zones a lot. Like what flips and broke it, like it comes back into there a lot. So I love to like get in on there. I will just get in on here, like no problem. Like it was a stop loss, like even you can get 1.2, whatever. You can get 10 hours pretty fast, straight there, right? If you need double confirmation, then yeah, you look for 15 seconds. I remember I gave a valid loss in here, but this is in terms of the entry model and everything. Like literally, it gives your 1 minute chuck and flip, comes straight back into the flip, right? Which is what flipped and broke the range. It comes straight back in and melts, dies off, right? Generates liquidity at the bottom, trend line, right? Weak corrective price action. What does weak corrective price action mean in terms of demand? Is that demand is weak, demand is failing to break the break price higher, to move price higher, and then price is impulsing down, like with meaning the supply is more powerful than demand, and that's why you see like impulses, like correction, so impulse, correction, impulse. Yeah, just very, very clean price action, very nice. Does that make sense? Yeah, like let's see. In terms of 15-second, it doesn't give it there, but it gives it like here, comes back into here. So on a 15-second chuck, it gives you a 15-second chuck and flip. So breaks it here. And then, this is the last one mitigated buy to sell that flipped the range, broke the range, and it comes straight back into there. Again, like stop loss is good enough, everything's nice, like you could get in there. Like it's a bit, you can say it's a bit risky, whatever, but it's good enough. Like in terms of 15-second chop and flip, like that buy to sell is clean enough. Yes, it could come into the extreme, but it loves flip zones. Let's see, any questions? Any questions? But I would make sure I'd be getting in on top of here though. I'd rather get in at higher pricing with my stop loss higher up and my entry higher up, so I can go break even and not have too much issues. Whereas getting in like lower up, lower down, yeah, and all that stuff. Any questions? Any questions?
Okay.
Yeah.
Can you, in a previous call, you said that when we have more than 1 minute POIs, you have two options.
Yeah.
You either go with a double confirmation entry on 15 seconds, right? Or if you can go away with covering the high of the extreme,
Yeah.
you go with 1 minute risk entry.
Yeah.
Right? So you here went with 1 minute risk entry and you didn't cover the high. Did I get it right?
Oh, this is a flip zone. This is the SD flip. So I'm just covering the flip instead of like this highs up here. Yeah, like it's you can say it's risk entry. You can say it's a bit risky, but this is like perfectly fine. Like I've seen this work enough times that like you don't need to have stop loss like 2.6 pips. Like have it 1.2, like all that stuff is good. It's good enough.
Is it just because? Yeah, just because the two POIs are very close to each other.
Yeah, you can even say like the first one like kind of already got mitigated as well.
Mitigated, yeah.
So it just makes more sense.
Yeah, if the POIs were
far away,
yeah, from each other, you would do like I said, right? Like you said in the other call.
Yeah, like
15 seconds entry or.
Yeah, 100%, 100%.
Yeah, thanks, man.
No problem. Anything else? Let's see. Is there Chuck? Yeah, it's trading around that time. Still okay. What time is this? 7:40. Yeah, it's okay. I'd say before 8 o'clock. Before 8 o'clock is fine. I would say after 8 o'clock, just leave. Come back tomorrow. Like, cause it's too close now to like this timing. Like, look at this. Hardest part for me is avoiding all of these other fake chucks. So only 15-second here can help me with that. Exactly, like having that double confirmation really helps you with that. Cash got a hand up. Okay, whoever's got a hand up.
Hey Cash, how are you?
Yo, yeah man, how you doing? Same name, man, that crazy.
Same name, man, same. He was slightly to the left on a 1 minute thing. Where we had the just here if you go to the left where we had that first fake chop.
Oh, the left side. Yeah.
Right.
What are you talking about here?
Yeah, perfect. So after that sweep, there was another 1 minute chop. Would you deal with it as a valid loss after this?
You mean here?
No, to the right. Where it
can you annotate? Can you go to the top of the screen? Annotate.
Yeah, this one.
Oh yeah. There's a couple of entries here. Yeah, there was some entries here. I can't go through all of them. They're on my end of the markups. If you go through, I think you just joined today, right?
Yeah.
You have to go through them. You'll find out like everything. Here as well, like there's the entry and the stop loss was too big, right? 2.3 pips. So I would not take that. I would not be able to like make sure I get a good enough stop loss. Like I know that would be 2.3, or if you're even a second late and you execute, it might be even lower down here. Yeah. So like you're just not too sure. I'll probably even miss it or not take it. But let's say you took it, then yeah, it's a valid break even, not a loss. Break even. Right. Therefore break even.
Oh, okay.
Like 100%. But that's it's the same trade as this. It's identical. Literally this and this is identical. Yeah.
In this, just once the next low breaks, the break even saves us here.
Yeah. Like I'd wait for this, and then when it's gone, I'd be a break even already. Like this is 1 minute boss. I'd already be break even. Like let's say it comes back in and it breaks second time, I'd go break even like that then. Yeah.
Yeah, perfect. Thanks.
So one boss or two. If the first one is too close to your entry, and let's say the first one is too close to your entry, you could still mitigate straight away. You could do that. Like let's say you enter like here or something, and it's too close, like the break and then your entry, right? It's too close. So price could easily mitigate and then go to TP. So I would rather than just wait for mitigation and break second time and then go break even then in that scenario. Okay. But you have to therefore rewatch the calls and go through the end of the markups and everything. And it has all the explanations and everything that you need to see. Like it's all there. But yeah, like this call is just for the strategy call session for the concept of like supply and demand and liquidity inducement. So hopefully everyone is on the ball with that now, and make sure this week you're all like practicing, go through like months of data, go and test everything, ask many questions, and smash it out. I know you got a hand up, Avi Perez.
Yeah.
How's it going?
Hey man. So just wanted to ask if you'd use here on this 20-minute POI, right? The premium discount tool, so it can help you like avoid all of these, I don't know if losses or fake chucks, So would you recommend that?
From here to here, you mean?
No, I mean only at the POI area. Yeah, just to avoid.
I don't do that.
No,
like it's enough to do it from the whole range. Like you don't need to do it on the POI. Yeah.
Yeah. Okay.
No, you don't need to do it on POI. So like it can come off of anywhere. Like yeah, this one came in so deep, but it could have gone from there to there. Honestly.
Mm-hmm.
Yeah.
Yeah.
So you don't want to over refine, and that's what some people have in terms of like
that's what
problems.
I thought.
Yeah, the problem people have like over refining, like they want to make sure it comes like there, and it's like yeah, you miss it, whatever.
Yeah. Okay, thanks, man.
Yeah, man, no problem. Invictus, how you doing?
Yo, what's up, dude?
I'm good, man. How you doing?
Good. Could you go on to the 1 minute time frame, the most recent entry? So I noticed you've got the flip and the extreme. So you said this POI right here was valid, right?
Yeah, it's possible. Yeah, it's still valid. Like it got mitigated a little bit with the wick, but still valid.
So what made you choose this? Like when price comes away and it comes back in, why would you decide to hit market execute on this one and not this one?
And not this one?
Yeah.
Oh, I mean, it's called a risk entry on for a reason, and it's like it's a risk to take it up